and welcome to Your Stocks in the Mumbai News Studio. I'm Ekta Batra. Well, it's turning out to be a day where we're just about marking time. So we have the Nifty, which is just about lower by around 12 odd points at this point in time. Mid-cap index, which is under pressure, so down around 1 odd percent for the mid-cap index. Advanced decline ratio at 1:3. So that is a worsening metric and has worsened through the day. Remember that it is the election verdict which the street will be waiting for on June 4th. So that's going to be an important day to mark in terms of where the equity markets would go. Remember that we've already scaled past 23,000. So the street seems to be quite optimistic already going into the election verdict. The next couple of days will be heavy in terms of a couple of data points from the US as well as from India. Well, joining us today, we have Ruchit Jain, lead research analyst at 5paisa.com, and Siddhartha Khemka, who's the head retail research at Motilal Oswal Financial Services, to answer all of your queries. Siddharth, as well as Ruchit, welcome to the show. Ruchit, let's start with you before we move ahead. How would you approach today's trade?
Yeah, hi, very good afternoon, Ekta. Well, Ekta, we have seen that the short-term momentum is there on both the sides, where we have seen some profit booking on higher levels. But if we talk about the broader trend still remains quite positive, especially the FIs have covered their short positions. Just a week ago, they had about 220,000 net positions on the short side with long-short ratio of just 28%. And as on yesterday's data, if you see, they are now 20,000 contracts on the long side. With long short ratio around 52%. So clearly indicates that shorts have been covered from the system, and hence the downside seems to be very limited. 22,800 is a very strong support for the index. So we don't see no index going much below that. So I think this dip which is coming today should be seen as a good buying opportunity.
Okay, so dip should be seen as a buying opportunity. What would your target be for the Nifty?
So on the higher side, we are watching 23,100, 150 to be the first hurdle, where we even witnessed yesterday's high, which is 127% retracement of the recent correction. And once that level is surpassed, the 161.8% retracement would come around 23,400. So I think the risk reward ratio is quite favorable if we look at some positional perspective, and we can expect levels around 23,400 to come in very soon.
Okay, all right, fair enough. Well, let's get in some queries now. We have Ashaya, who writes to us from Bangalore, holds 50 shares of Asian Paints, which is bought at around 2,500 odd rupees. So sitting on a profit there, wants to know what the future prospects of this particular investment are. Well, what would you recommend, Siddharth? When it comes to Asian Paints, we all know about the impending competition which is coming into the space. On a larger scale, would it still be a buy? Would it be a portfolio stock that you buy and probably forget about even, for years together?
Yeah, hi. So if you look at Asian Paints, what we are witnessing is that over the last couple of years, the growth has definitely slowed down. And that is clearly being witnessed in the market valuation, or you can say the premium that the stock used to command, which has kind of witnessing time correction over the last few years. What has also happened, as you rightly said, is about the impending competition, which has already entered into the market. And some of these large players, they have not only strong growth plans, but they are also spending big in terms of branding, which is where it is hurting the most to Asian Paints. So currently, we have a neutral rating on 2-3 factors. A, while the volume growth is there, we are seeing pricing pressure in the entire paints industry. For the fourth quarter, we saw Asian Paints taking a price cut in the range of 3.5%. This is something generally we do not see with a company like Asian Paints. Further, as I said, the company is sitting on a very high margin because of the low raw material prices. From here on, crude oil prices have inched up. Some of the other raw material prices have also inched up. So we expect a little bit of margin pressure on account of the raw material prices, on account of realization, which could continue to remain under pressure. And we believe that valuations and the growth at this juncture do not justify. And hence, I would advise them to sell Asian Paints at current levels and to move into some other consumer names.
Okay, all right. And technically, how would you approach the stock, Ruchit? Asian Paints, it's been weak in the past 1 year.
Yeah, so if you look at a bit positional charts, since 2021, I think it's almost 3 years the stock has been consolidating in the range. But in these 3 years, whenever the stock has come in that 2600 to 2700 range, it has managed to find a good support. So it's almost 4 times in these 3 years the prices have came down to 2600, 2700, and again seen a bounce back from that. So it's now trading around the lower end of the range. So it seems that the price wise correction or price wise downside should be limited from here on. But no, there are no signs of a resumption of any kind of larger degree uptrend as well. So I think still that time wise correction or consolidation should continue. If not price wise correction, there's a more probability that the time wise corrective phase should continue in this stock. So we expect some consolidation to happen in Asian Paints. On the higher side, the resistance would come around 3000, 3050 range. So I think that would be the range where you can look to book profits if it's bought at lower levels.
Okay, all right. Well, Rakesh Nair now writes to us from Chandigarh, holds 250 shares of Ashok Leyland at 212.36. Wants to know what to do, whether to hold or sell at these levels. Well, Ashok Leyland has been sitting at a fresh record high. And as of now, Rakesh is sitting on a profit as well. They seem to be quite bullish in terms of the CV space, growth outlook going forward, margins as well. From that perspective, Siddharth, what would your call be on Ashok Leyland?
Yeah, Ekta, so we are also very positive on Ashok Leyland. We have a buy rating and a target price of 245. So definitely would recommend Rakesh to hold on to Ashok Leyland. Q4 numbers were very strong for Ashok Leyland. They had shown improvement in both mix as well as cost control measures, led to good improvement in EBITDA margins. And if you look at overall, we are expecting the industry outlook for the CV cycle, both for the MHCVs, which is the heavy commercial vehicles, and the LCVs, which is the light commercial vehicles. Both of them, we believe, that could do well in FY25 because of the growth factors. Post-election, we see resumption of a lot of infrastructure projects, which should improve demand. We are also expecting a very good, healthy monsoon this year, which should also lead to good demand from the rural recovery. And overall, if you look at the business mix, we believe Ashok Leyland is best investment choice to play the CV growth cycle, and the company has positioned itself to look at both revenue growth as well as profitability, which is helping them with proper margin expansion. Valuations are still comfortable, and hence we see the stock reaching towards a target price of 245, 250 over the next couple of quarters.
Okay, 245 to 250 is your target price on Ashok Leyland in the next couple of quarters. Technically, any further upside, and what would your target be, Ruchit, on Ashok Leyland?
So the stock is trading at all-time highs, and in technical analysis, usually whenever there is no historical data, when the stocks are trading at all-time highs, the retracements of previous corrections help us to find out the targets or resistances. The recent correction which the stock has seen from 191 to 157, 261.8% retracement of that corrective phase is coming around 246. So I think he can hold on to his long positions. I think 246 technically seems quite possible in the short term.
Okay, all right. That's on Ashok Leyland. Now let's get to another query. Rakesh Nair writes to us from Chandigarh. He holds 250 shares of Ashok. We've already taken that on Ashok Leyland. Kamini Jain writes to us from Pune with an investment query. She wants to buy Infosys and asks when she can buy some shares of Infosys. Well, Siddharth, let's go with you on this one. It's an investment question. Wants to buy Infosys. When is a good time to buy Infosys? And tell us, how long should one now hold Infosys considering the dynamic changes which are taking place in the tech space?
Yeah, I think if someone is looking at tech, definitely the investment horizon has to be 1 year plus, because the near term, you continue to see headwinds, especially because the growth in the key markets of US and Europe is still not coming by. However, on the positive side, we are seeing that the deal wins continues to be very strong. The order books for some of these IT players are very strong. That gives a long-term visibility. Having said that, again, in terms of price, we believe that the worst is already factored in the price. So this current level is something I would recommend start entering gradually. You can buy in 2 or 3 phases. So you buy something now, post Q1, you buy another 25-30%. So in 3 tranches, you can buy Infosys. Infosys, as I said, again, is among the top leaders in the Indian IT space. It's seeing good traction in deal wins, which continues to remain strong. And while the near-term growth guidance is like marginally lower, the IT companies have been distributing good cash flows as well as buybacks, which is leading to a good support at current levels. So our current recommendation is a buy with a target price of 1650 from a 1-year perspective. And I feel you can buy it in 2 or 3 tranches. That will give you a good average out on the overall IT space.
Okay, all right. And what about the technicals, Ruchit, of Infosys? Any targets there? And, you know, if you've looked at the charts on a long-term basis, what does it tell you?
So I have a similar view on Infosys that it's a good buy at current levels if you're looking from a long-term perspective. Just looking at a previous move, which the stock rallied from 1180 to about 1730 till the month of February, and post that it has been in a corrective phase in spite of the broader markets doing well. The IT has not seen any kind of positive performance. But the stock is trading around the 61.8% retracement of the entire previous uptrend, and it's not only Infosys. If you look at the Nifty IT index, the Nifty IT index has already retraced 50% of the previous uptrend. So I think that price-wise downside seems to be very limited from here on. Yes, there are no signs of any resumption of the uptrend, but no, in case if anyone looking from a longer-term perspective, then I think since the downside seems to be limited, it's better to accumulate the stock in a staggered manner. And it's I think looking at the retracement supports, one can start initiating buying even at current levels.
Okay. All right. Well, we have another query now. We have Sagar, who writes to us from Ahmedabad. He holds 380 shares of GMR Airports, which he's bought at 44. He wants to know if he can buy more shares of it. Well, sitting on a good profit now, and it's seen a good run up. So technically, how would you approach this stock, Ruchit, GMR Airports? What would your target be?
So broader trend for the stock is positive, but I won't recommend buying more at current levels or averaging at current levels. Since last 3 months the stock has been in a broad range of 94 to 75, which on a longer time frame chart just seems to be a time-wise correction within an uptrend. So in case if we see any kind of dip towards that lower end of the range, maybe around 80 rupees in the range of 80 to 75, then the risk reward ratio would turn favorable for fresh buys. And on the higher side, 92 is the first resistance, and if that is crossed, then one can expect levels around 105 to 108. So hold on to existing long positions, but won't recommend adding more at current levels. Any dip towards 80 to 75 range could be a good range to buy more.
Okay, all right. So that's on GMR Airports. Well, we need to take a quick break, but lot more queries lined up on the other side. Stay tuned. Welcome back. You're still tuned in to Your Stocks. We have with us Siddharth and Ruchit to answer all of your queries this afternoon. Well, let's get in another question now. We have Harsh Kataria, who writes to us from Mumbai with an investment question. He's asking if he can buy Bata for a period of 1 to 6 months. Well, more of a short-term trader there. So I'm going to toss it over to you, Ruchit. What would you recommend on Bata on a 1 to 6 month horizon?
Well, the stock has been an underperformer in last few months. If we look at since the month of August, although the broader markets have done quite well, the stock has been in a corrective phase, and still there are no signs of any kind of trend reversals over here. The pullback moves which we have seen in last few days also have not seen any up move supported by good volume. So I think there are better trading opportunities if you're looking from 1 to 6 months perspective rather than Bata. So I would recommend to avoid the stock from a short-term perspective.
Okay, all right. And what about the fundamentals, Siddharth? How would you approach the fundamentals?
I think if you look at the results also, they have been very weak and soft. Overall, if you look at the footwear industry, demand has been lower, margins have kind of been suppressed, and Bata has kind of underperformed. And looking at the key near term, at least, we don't see any recovery in the growth despite the good monsoon. So there are other better players available. And I think, again, in the broader consumer space, you will have better names to play with. Another example where valuations had been pretty high and growth has not been participating, and hence we are seeing the valuation kind of correcting with the slower financial performance. So it's a clear avoid at the current juncture.
Okay, clear avoid at the current juncture. Well, Sandhya Jain now writes to us from Kerala. She holds 5 shares of HCL Tech, which is bought at 11.47. So she's sitting on a profit there. Long-term investor wants to know what to do, hold or sell at current levels. Well, interesting one. What would you recommend, Siddharth, on this particular counter? We've already spoken about Infosys, but HCL Tech in specific.
Yeah, so again, another IT company, FY25 growth guidance has been weak. But the good part about HCL Tech is that it has a different business model, given that it is one of these IT companies which is more focused towards cloud, where we are seeing consistently some more improvement in terms of numbers. So higher exposure to cloud, which comprises a larger portion of the non-discretionary spending, which offers a resilience to its portfolio in the current context. So we expect it to do better. Again, cloud, network, security, digital workplace services, its capabilities in the IMS, which is the infrastructure management services. So look at this space from a medium to long-term perspective. Again, near term, the weakness would continue for 1 or 2 more quarters. But within the IT pack, we believe, given its diversified and more focus towards cloud and infrastructure, it could do well. So we have a buy rating with a target price of 1700. Again, near-term weakness could continue.
Okay, near-term weakness could continue. Technically, HCL Tech, Ruchit?
Looking at a buy price, I can make a guess that no, she's a long-term investor and has bought that much earlier. But I think the stock has already seen some good correction in the last couple of quarters, and the stock is now trading around its crucial support, which is around 1250 to 1300 range. So considering this support range, I think these are not the prices where one should look to exit or book profits over here. At least a near-term pullback in short to medium term towards 1450, 1500 levels should be expected, and one can take a review again once the stock comes in that range.
Okay, all right. Well, some numbers flashing on your screen. It's a turnaround for Hind Rectifiers. 5 crores in terms of profit versus a loss on a year-on-year basis, as you can see on your screen. So the stock is up around 5% at this point in time, spiking up with a revenue growth of around 36% on a year-on-year basis as well. Well, Gopika Shah now writes to us from Vadodara. She holds 25 shares of Voltas, which is bought at 1210. She wants to know what to do, whether to hold or sell this particular stock. So she's sitting on a profit on Voltas. Technically, what are the technicals looking like, Ruchit, on Voltas?
So we did see some small correction recently, but in that correction, the stock has managed to hold its 50-day exponential moving average support, which was very important. And the good thing is that the price up moves have been supported by rising volumes. So I think till the stock is about 1250, 1280 support range, the broader trend remains positive in spite of this short-term corrections of volatility that we have seen. So I would recommend to continue to hold on, but keep a strict stop loss below 1250. And as the price moves higher, then she can trail the stop losses higher.
Okay. All right. And quickly before we wrap up the show, Siddharth, your call on Voltas?
Yeah, Ekta, so we are positive on Voltas. It's a market leader in the room AC segment, and we believe that the room AC segment, RAC, is a long-term structural story in India, given the low penetration of ACs in India, rising income levels, and the aspiration of the middle income group. And to add to it, the weather changes and the heat waves across the country, which is leading to more purchases for the room ACs. So we believe Voltas, with its strong brand distribution and almost 22% market share in the room AC segment, would continue to do well. So recommend hold. We have a buy rating with a target price of almost 1600. So you can definitely see more upsides in the coming quarters.
Okay, all right. Well, that is on Voltas, and Siddharth as well as Ruchit. We're going to wrap up on the show on that note. It's been a pleasure hearing your views. Thanks very much for joining in and giving us all of that perspective. That's all the time that we have on the show. But do remember to email us your questions. We'll address them with our experts. Closing bell to take you through the last hour of trade.